You're watching us here on Midcap Radar. It's a good afternoon. Good because the Nifty has reclaimed that 23,000 mark. Dips were shallow. All indices looking good. The midcaps looking even better. I'm Manglam. With me, Vivek.
Good afternoon, Manglam. So, if you're looking at the midcap and the Nifty 500 index, up for the 11th straight session, 13-year lifetime high, so doing very well. But we have an action-packed show, quite a lot lined up on the show. Start off with the headlines. Stocks trade in the green after Nifty stamps 23,000 level, but advances and declines remain evenly balanced. Metals and financial services are the big gainers, while realty and FMCG drag. Midcaps relatively outperform.
Finolex Cable surges over 15% after reporting good fourth quarter numbers. Revenue surged 14%, while the profit after tax is up 6% on a year-on-year basis.
Bayer Crop Sciences slips after reporting weak Q4 numbers. Revenue is down by almost 19%, while net profit declines 39%. Margin also contracts on a year-on-year basis.
Vodafone Idea surges as brokerage firm UBS upgraded the stock to a buy rating. Joins the list of a lot of brokerages that have upgraded their outlook on the stock post its FPO. UBS's target price is 18 rupees per share. They forecast a potential upside of 70 to 80% on that stock.
Schneider Electric is under pressure after reporting a mixed set of Q4 numbers. The company reported its highest ever revenue and profitability in FY24. Provisioning for an ongoing income tax matter impacted the profitability.
All right, then we're talking about a lot of these mid-caps moving well. Just keep an eye out on a couple of these frontliners. We spoke about Vodafone briefly. Bharti Airtel has moved to the high point of trade. NTPC has done well. L&T, that stock's been on a tear as well. In fact, in the last 12 months, it's rallied nearly 70%. That up move on that stock continues as well. And we're seeing a decent traction on something like Maruti Suzuki as well. So the combined might of all these frontliners have held the Nifty above that 23,000 mark. And also keep an eye out on HDFC Bank. Yesterday was below all the important moving averages, 20, 50, 100 and 200. And in just a matter of a day and a half, we've seen the stock go past the 200, 20, 100 and 50-day moving average as well. So big move on big boy HDFC Bank. But yes, Vivek, go ahead.
No problem. I just wanted to highlight, you did talk about Vodafone Idea doing well. You talk about Bharti Airtel and even Industars today, the entire telecom pack is doing quite well. Just a couple of stocks to point out, have a look at Timken. That particular stock in the last hour has moved quite significantly. That's Timken India we're talking about. But a whole host of other stocks is what Nigel is going to highlight in our special segment, Midcap Movers. Nigel, over to you.
Well, let's start off with the top buzzer of the day. The stock that came out of the F&O ban, Vodafone Idea. That stock is up 9%, moving on massive volumes in today's trading session, giving it company on the upside. A couple of those winners, they've got back to their winning ways. So you saw a bit of a knee-jerk reaction on both these two, PFC and RXC. But they are saying, let's pick up the, the mantle and let's move ahead. So both those two are higher. Exide, I briefly remember an early morning trading session, the stock was under some pressure. It's done a big U-turn I saw. So who would have thought a stock that was a relative underperformer, for 4-5 years odd, it's come out of that slumber and it's moved very, very briskly from around the 200 odd mark to closer to around 500 rupees. A few more stocks, these defense stocks, they're on the offense. Have to go with that one. You have HAL, BDL, both of them moving higher. Kochi Shipyard as well as buzzing in trade. And Welspun Enterprises holding with the gain of closure around 5%. But it's not all green. There are a few stocks that are coming for profit taking. Interglobe Aviation, that's what market positioning makes, tells you. Interglobe Aviation numbers very, very good. The stock opened up with a gain of around 2.5%. And it's now down close to around 3%. Maybe for a longer term investor, it could look like a buying opportunity. But for the time being, it's one of the top volume losers on the downside. Godrej Properties, there is some fears with regard to one of their projects here in Mumbai. The Defence Ministry has sent them a notice as per what reports suggest. So that's down close to around 2.5%. And from the pharma pack, you have Torrent Pharma that's under some pressure. Schneider Electric as well coming for profit taking. And Keystone Realtors, some of those stocks have been big outperformers. But for the second day running, Keystone Realtors is under some pressure. Back to you guys.
All right, Nigel, not done with you yet, because while you were doing, that link telling us about the stocks which are moving and shaking, I couldn't help but notice you put on your dancing shoes, Nigel. It's the three of us, the markets are moving. It's a Friday. How about a little bit of a jig?
No, not now. But later this evening, with that music playing, animal music.
All right, with a glass on your head.
And Vivek also will be giving me company, so you better join.
Oh, most definitely. I have my glass ready, but there's just water in it right now. Vivek, what about you?
Markets at all-time high, anything goes.
All right, markets at all-time high, anything goes.
Manglam, you'll be joining us?
I will be joining you with my glass of green tea, but I'll do the jig.
All right, thanks, gentlemen.
All right, Nigel, thank you for that. Such is the mood. Let's also welcome Heyman Kapadia of KR Choksi joining in for a quick technical check on the market. Heyman, things are moving, things are buzzing around. For how long?
A very good afternoon to you, Mangalam. Thank you for having me on the show. It's always a pleasure. Well, that is a googly that you've thrown to me, Mangalam. How long? Well, it's anybody's guess. Going strictly by technicals, 22,769 was a major headache, Mangalam. We've taken that out. And for the second day in a row, we're sustaining above that. So frankly speaking, this opens a door for upside 23,300 and maybe even more. The bank Nifty is supporting the move. Ideally, we need a close above 49,057. Reliance is staging a comeback. Reliance has done nothing, Mangalam, for the last 15 weeks. And now Reliance is waking up. Okay, it's not yet broken out. But once Reliance takes out, there's this range between 3,000 and 3,018, Mangalam. Once that gets taken out, it would be very surprising if Reliance doesn't move 8 or 10% from there. So, frankly speaking, the numbers come into your head make no sense because it seemed like astronomical proportions on the upside. So, everything is hunky-dory. Once again, for how long, I'm not sure. The VIX is at 21.5, which is natural. It moves up. In 2019, it had gone up to 29. In 2014, it had gone up to 39. Having said that, we still have headroom over there. But I guess not being political, the election results are sort of, out there, already given. So everything looks fine. Levels don't break on the downside. You have IT oversold, FMCG looking good, cement moving. Pharma is trying to break out of a 15-week consolidation phase. Everything looks good. So fingers crossed, seems good.
Thank you so much, Heyman, for joining us and giving us a broad sense. But, at this point of time, which are the stocks, that are best placed to give returns also? Which are your top stock recommendations for today?
Yeah, firstly, that a buy call on Axis Bank, it looks good. We posted we are almost near a fresh all-time high. And we've had a consolidation phase, had a breakout, a pullback, and now we're back up again. So a buy on Axis Bank at 1170, a stop loss of 1140 and target of 1230. The second one is a buy call on Balrampur Chini. It's been consolidating higher top, higher bottom oscillators on the daily charts have given a crossover buy, has closed above the 55-day exponential moving average. So everything looks fine and we are looking at a further upside. So a buy on, it's a slow moving stock though. A buy on Balrampur Chini at 384, stop loss 335, target 402. It's sort of a 1 week sort of a call. Yeah.
All right. Would you have a view on BSC by any chance? Because as we speak, the stock seems to be spiking up once again. It's been a big mover in the past, but the last month or so, it took a brief pause. In fact, this week as well, despite the up move that we're seeing today on the stock, BSC, Bombay Stock Exchange, we've, still not come out of the woods for this week. We're still down by about 1.5%. Your thoughts on this one? Do you think the correction is done or this is just a dead cat bounce?
Currently, the correction seems to be done, Mangalam, if you have a slightly shorter term point of view. A 4-week consolidation, I'd say consolidation because the bigger picture is bullish and we are in a correction in a bull market. So a range between 2595 and 2900, 4-week consolidation. Now it's bouncing back after taking supports, oversold, a hint of positive divergence. So I believe a short-term correction is over, but we need a close about 2,900 for it to resume its intermediate uptrend. But yes, timing, the worst is over. Until we don't break 2595, chances of it going up are more than chances of it going down.
Thank you so much for that. In fact, today even Investec has put out a note where they have a fast buy as far as BSE is concerned. So that could also be aiding the up move in today's trading
session. It's a vertical up move that we're seeing. So definitely a lot of people would have gotten their hands on that Investec report, and maybe they are acting on the fast buy. It's a 5.5% up move that we're seeing on BSE after the stock having corrected nearly 15% from its highs. Thanks a lot, Heyman, for joining in. We speak to you next Friday as well. Take a short break. Come back on the other side. We'll get you an exclusive conversation with Ankur Gupta of Brookfield Asset Management. Stay tuned.
Welcome back to Midcap Radar. Even as the market flirts near the all-time high levels, we have an exclusive conversation lined up for you. Asset manager Brookfield Asset Management is planning to list its luxury hotel chain, the Leela Palaces, soon. Ankur Gupta, the managing partner and head of real estate for Asia Pacific region, tells Shireen Ban that the aim is to make Leela a global brand. Adds that they are very bullish on the housing space in India and that they are investing significant capital in India.
In 2019, when we recapitalized the Leela business, it was a play on two themes. One is that the hotel sector had been on a decade-long downward cycle, such that new supply had completely evaporated. Urbanization trends in India had continued at the same time. More office space was being taken up. Cities had become denser, and business activity had doubled over the course of that decade. So while it looked like a bet, I think it was a very conscious value investment for us. We believed in the brand. So it wasn't just a real estate play, it was a play on turning around an operating business. In the last 5 years, the business has grown from 8 hotels to now 15 hotels, and we have a pipeline which gives us a site for almost 20 properties across the country. We have kept up the luxury quotient and even enhanced it in the last 5 years. Over the last 5 years, in 4 years, we've been ranked in the top 3 brands across the world. So I would say that across the board, the Leela investments has turned out pretty well for us, in terms of the hindsight 2020. We, of course, didn't model in 2 years of COVID
Yes.
stress. But again, when you buy good businesses and you want to make them great, you have to take some years of volatility in your stride. Now, what's next for Leela? Keep running a good business. I think that's the motto for us. And when recapitalization happens in those businesses, that the business calls for it, and then momentum of growth and access to more partners, in this case could be public market partners, takes it even further.
So how soon can we expect partners in the public market as far as the Leela story is concerned?
Look, if I'm allowed to talk about it, I would say the business is at that point where the growth that we are seeing will ensure that some amount of activity will happen sooner than later.
25?
2024 we are in, right?
Yeah. So 2024 or 25?
I would always say that it's better to do things today than to wait for tomorrow.
Okay, so 24 then. Okay, that gives us clarity. So linking this to the themes that you listed out in terms of service apartments and also the luxury side of the India story, which has been booming, especially post-COVID. What's the play that you see Leela doing on both these ends? Is that going to be your vehicle to address both these opportunities?
I would say rental housing is a space that covers a large spectrum. A median age of India is 28. As I said, India has a lot of terminal growth in front of us, many decades, which may not be true for many other large economies. A typical kid would leave home at 18. That starts the journey of student accommodation, then hostels, serviced apartments, typical multifamily rental space. At 38 is when a typical Indian would take a mortgage. So you are looking at a very wide spectrum of housing needs in a manner that's affordable. And affordable doesn't always mean headline rent. It means the overall package that comes across. So on the housing side, Leela certainly targets the service apartment high-end luxury rental side. We are coming up with a fantastic project in Mumbai next to the airport, which will be a service apartment managed by Leela. And I think that will be a prototype for us to do more. But overall in the housing space, I'm very bullish that an economy like India, a young country like India, has a lot of legs for us to be investing significant capital in the housing space here. On the question of the brand, globally hospitality has created fantastic brands coming from different regions and then them becoming worldwide names. Mandarin came from the Far East, Jumeirah came from Middle East, and from the West we had Four Seasons. I think it's time that India creates its own luxury brand that's recognized world over. So that's something that we've been trying to do.
So that's the aspiration?
The aspiration is always been there.
And taking it global?
Yes, I would say that we've taken early steps towards it, and in a more methodical manner. Look, Brookfield is a global investor.
Yeah.
We invest in 30 countries. Our LPs come from all across the world. So today the recognition of Leela with the investor community is very high. In the last 5 years, we've told that story to most of our partners across the world. So the recognition for Leela has always been high, both from users of Leela that have come and visited and stayed at Leela and experienced this luxury, but also in the investor community. and hopefully the next chapter creates more vibrancy around it.
You're talking about growth and you're talking about opportunities as well. I think one of the things that the market is excited about or enthused by is the possibility of you actually upping your guidance as far as new leasing is concerned, because you seem to be on track or in fact have done better than what was expected at this point in time. What's the expectation?
So we've always expected that commercial real estate coming out of the COVID pandemic had hit a rock bottom sometime last year. And the demand side continues to be very strong. People were waiting around at the gates saying, is it the right time? Are people back to work? India never really saw that complete work from home culture. Yes, there was a period of time, rightly so, when the government mandated that we should all work from home, and that helped control the bad effect of the pandemic. I think India. Urbanization is a big trend in the country. In fact, I've gone on and said that we need more suburbanization because our cities are getting a little bit too concentrated. But as far as the REIT is concerned today, the leasing has been, we've achieved 40% of our next 18-month guidance, and I would say that we should beat that guidance now. Two parts are important. We don't only manage for occupancy, manage for overall return, which is we have to keep making sure that our headroom rental growth that we have is also achieved, because that creates outsized returns for our investors and to our own capital. So I would assume that these assets that we have used to run at 95, 97% occupancy, and today we are in the mid-80s. So there's a 10% headroom to grow in terms of occupancy levels and a 17 to 20% headroom to grow on rentals.
All right, interesting conversation out there. Hotel Leela, what a turnaround story it's been. Listing on the bourses would be extremely crucial to watch out for out there, and interesting as well, given that sort of turn that we're seeing in the hospitality industry. But while that conversation was underway, NIIT Limited reported their numbers, and what a big move we've seen in the stock price ever since the numbers have hit the wires, and that's because it's an operational turnaround that the company's seen. In the fourth quarter, which is typically a weak quarter, seasonally weak quarter for NIIT, the revenues have actually grown 24% year on year and 13% quarter on quarter. And the EBITDA as well, the margins at the same time last year, it was a loss of about 9.5 crores. That's turned positive by about 1.3 crores. So that's a big turnaround there. And that's reflected in the bottom line as well. A loss of 9.4 crores turning into a profit of 11.2 crores. So just look at the up move that we've seen as soon as the numbers hit the wires. The stock doing well, up around 8.5%. Take a short break, come back, get you more of the markets and put focus on a lot of individual stocks. Case in point, Schneider, that's our mid-cap spotlight. Welcome back. You're watching us here on Midcap Radar. Metropolis Health, the stock that did well post its numbers, continues to do well, now has moved higher. In fact, this morning it was lower by about 2.5%. From the lows, it's actually recovered a good 5.5%, currently sitting at the high point of trade, making this week's gains close to around 8% itself. But in an otherwise good, strong market, Schneider is the one which is lower in today's trading session. They reported a mixed set of fourth quarter earnings, and that stock is our mid-cap spotlight. So to put the spotlight on that, we have Vamakshi joining in. Vamakshi.
Well, absolutely. Like you rightly pointed out, it's a mixed quarter for Schneider. What's good this time around is the fact that the company has managed to report the highest ever annual revenue, EBITDA, as well as net profit in FY24. The gross margins in the fourth quarter have also seen an improvement of around 350 basis points, and this is largely being led by raw material cost normalization as well as a better mix. The EBITDA margin too has seen an expansion of around 70 basis points, and in fact it is at a multi-quarter high. The intercompany borrowings also reduced by 25 crores. So again, this is a positive coming in for Schneider. But what's bad this time around, the company has noted a quarter-on-quarter decline across the board in revenue, EBITDA as well as PAT. The net profit in the fourth quarter has seen a sharp fall of almost 93% on a YOY basis, and this is because the company had to create a provision for ongoing income tax matters of almost 48 crores. The order inflow growth also was in mid-single digits. It's up nearly 6.2% YOY, and this is much slower as compared to nearly 15 to 20% that the company had generally expected. And this slowdown is largely mainly on account of general elections, selective order picking, as well as the company says that this impact is expected to continue in Q1 as well. The company also held a con call, and they said that the overall transformer market in India is estimated to grow at 7 to 8% annually. They have a positive outlook for data centers, and in fact they expect a rebound in order flows once the new government is formed. But as of now, the street is paying more attention into the negatives as compared to the positives, and as a result, the stock is declining in trade today.
Thank you so much for that, Vamakshi. The stock is down at the low circuit limit today. But the next set of stocks that are doing quite well is the entire telecom pack. Today, there has been a positive note coming in from UBS on Vodafone Idea. Rima joins in now with more details.
Thanks so much for that. So UBS has upgraded Vodafone Idea and they've put a target price at 18 rupees. And this, mind you, is the highest target price on the street. There are a few others who had recently upgraded it, like a Citi, Bofa, but their target price was close to about 15 rupees. Now, this upgrade by UBS is predicated on two triggers playing out for Vodafone Idea. One is a tariff hike, which according to UBS should be 15 to 20% in the next 1 or 2 years. And the second one is a potential relief from the government. Now, UBS's view is that a tariff hike is probably priced in already in the market in terms of the stocks. But if a potential relief comes from the government, whether on the AGR dues or on the spectrum, and here the view is that the AGR dues could come down by nearly 50%, then the upside for Vodafone Idea could be quite significant. So, actually UBS says that both Bharti and Idea are trading at a similar valuation. But if the telecom relief comes through from the government, then the upside for Vodafone Idea is so much more, the leverage for Vodafone Idea. So therefore they believe the risk reward is fairly, is very favorable, and they've gone ahead and raised the target price to 18 rupees. In fact, most of the other brokerages, when they reinitiated coverage on Vodafone Idea, they still had a neutral call, but it's only UBS which has a buy call on Vodafone Idea. On the others, UBS is a neutral call, Bharti Airtel, and on Indus Stars. Back to you.
All right, Rima, thanks a lot for that. That's about the telecom space, a buzz ringing in gains today. But let's also talk about Finolex Cables firing up after having a good set of numbers. Upasna joins in to give us the details on that one. Upasna.
The company reported good set of numbers in its Q4 FY24. The numbers were above the street estimates. The revenue saw a growth of 14% on a YoY basis and stood around 1400 crore, while the street was estimating a number around 1329 crores. The revenue growth was mainly driven by growth in electrical cable segment, which contributes almost 86% of the company's overall revenues. Now, coming to this segment, the revenue saw an uptick of 16% on a YoY basis, while margins dipped 70 basis points and stood at 12.1%. It is also important to know that the share of low margin segments like communication cables also decreased from 14% to 9% on a YoY basis. Coming to company's overall EBITDA margins, they saw a downtick of 30 basis points and stood at 11.6%, while the street was working with a number of 12%, which is slightly below the estimates. The PAT saw an uptick of 6% and stood at 186 crores, while the street was working with a number of just about 145 crores. So all in all, we are seeing a good set of numbers reported by Finolex Cables in its Q4 FY24.
All right, Upasna, thanks a lot for that. That's about Finolex Cables. The market's doing market things. The mid-cap index up at the high point of trade with a gain of almost 250 points as the Nifty flirts with 23,000. With that, it's curtains down on this edition of Mid-Cap Radar. In fact, as we speak, we also have the numbers of Ashok Leyland at the bottom of your screen. So 900 crore on the net profit as against CNBC-TV18 poll of 920 crores. Largely in line, a smidge is what we're seeing on the way up for the stock. We'll keep an eye out on the revenue as well as the EBITDA. So shortly, we should have the revenue and the EBITDA of Ashok Leyland flashing for you on the screen. What we have so far, the one number is the net profit, which is coming at 900 crore versus street expectations of 920 crores itself. There we have the revenue as well, largely in line again, 11,267 crores versus a CNBC-TV18 poll of 11,275 crores. So the two numbers that we have on Ashok Leyland, largely in line. So what we'll do is take your leave, come back on the other side, your stocks and some more analysis on Ashok Leyland's numbers.